So, you run a business in India? Then you've probably heard of something called TDS. Today, we're going to break down exactly what Form 26Q is and, more importantly, how you can file it without all the stress. Let's make sure you stay compliant and avoid any of those unnecessary headaches.
You know, whenever you pay a vendor, a contractor, or really any professional for their services in India, you're doing more than just clearing an invoice. The tax system has basically made you a tax collector, and you might not even realize it. That's the whole idea behind TDS, which stands for Tax Deducted at Source.
So, how do you report all this back to the government? Well, that's where TDS Return Filing comes in. It's your official statement, your way of telling them, hey, I made these payments, I deducted the right amount of tax, and here are all the details. Think of it as a really important piece of your company's financial puzzle.
All right, here's our game plan for today. We're going to tackle this in 5 simple parts. First up, the absolute basics. Then we'll get into your deadlines, what happens if you miss them, yikes, the actual step-by-step process for filing, and finally, why this all is so important for your business.
Okay, let's dive right in and start with the foundation. To really get this right, you first need to know who the key players are in this process and exactly what form we're dealing with.
So, in this whole TDS world, there are 2 key players. You, the one who's making the payment and actually cutting out the tax, you're called the deductor. And the person on the other end, the one receiving the payment after the tax is taken out, like your web developer or your landlord, they're the deductee. So remember, you're the deductor, they're the deductee. Simple as that.
Okay, so what about this Form 26Q we're talking about? Think of it as the go-to form for pretty much all your typical business payments, with one big exception: salaries. So if you're paying a contractor, a consultant, commissions, or even rent, Form 26Q is going to be your best friend.
All right, this next part is absolutely crucial. Seriously, this is where so many people get tripped up because you're not just juggling one deadline, you're juggling 2 different ones. There's a deadline for paying the tax and a totally separate one for filing the return.
Think of it like a monthly and a quarterly rhythm you have to get into. Every single month, the tax you've collected has to be paid to the government, and the deadline for that is the 7th of the next month. But the report, the big summary of everything, that's the TDS return, you only have to file that once a quarter. 2 very different tasks on 2 very different schedules.
So here's what that quarterly filing cycle looks like for the whole year. You've got 4 key deadlines to mark in your calendar. And here's a little pro tip. Notice that for the very last quarter, the one that ends in March, you actually get a little extra breathing room. The deadline for that one is pushed to May 31st. Okay, so we know what to do and when to do it. But what if you don't? What happens if you're late? Let's talk about the penalties, because they can sting.
This is super important to understand. There are 2 different kinds of penalties you can face. One is interest for paying the tax late, and the other is a flat fee for filing the return late. They are not the same thing. So let's tackle the interest first.
When it comes to interest, the government is looking at 2 specific mistakes. First, maybe you just forgot to deduct the tax on time. Whoops, it happens. But the second one, that's when you did deduct it, but then you kind of just held on to the money instead of paying it to the government, and they take that one a lot more seriously.
So if you make that first mistake, deducting late, the penalty is 1% interest for every single month, or even just part of a month that you're delayed. And that clock starts ticking from the day you were supposed to make the deduction in the first place.
Now, what about that second, more serious mistake? Well, if you deduct on time but pay the government late, that interest rate jumps up to 1.5% per month. Why? Well, from their perspective, you're literally holding on to their cash, and they're not too happy about that.
Let's make this real with an example so you can see how fast this adds up. Let's say you were supposed to deduct tax on July 1st, but you totally forgot and didn't do it until February 28th. That's a delay that spans 8 months, July, August, all the way to February. So you'll pay 1% interest for each of those 8 months. But wait, it gets worse. Let's say you don't actually deposit that money until June 2nd. Now you're going to get hit with the higher 1.5% interest for the delay from February through June. That's another 5 months of interest. You can see how these penalties can really escalate.
Okay, so that was interest. What about the late filing fee? This one's a bit more straightforward. It's a flat 200 rupees for every single day you're late. But there is a silver lining. It's capped. The total fee can't go over the total amount of TDS you actually had to pay for that quarter. Still, it adds up fast and you really want to avoid it.
All right, now that we're all properly motivated to avoid those penalties, let's get into the how-to. I'm going to give you a simplified roadmap of the filing process so it doesn't feel so overwhelming.
Okay,
At a high level, the whole process boils down to 5 main steps. First, you gather up all your data for the quarter. Then you use a free government tool, it's called the RPU, to punch in all that info. Now the key part here is step 3, the validation. You have to download something called a CSI file, which basically confirms that your payments match what the government has on record. It's a crucial check. Once that's done, you generate the final file, zip it up, and boom, you upload it to the portal.
Phew. Okay. We've gone through the what, the when, the how, and the what if you mess up. So let's wrap this up by looking at the big picture. Why does all of this really matter? What's the payoff?
You know, getting this right isn't just about dodging bullets. There are some real benefits here. Of course, you're staying on the right side of the law and avoiding those nasty penalties. But here's a huge one. You're actually helping out your vendors. Your correct and timely filing is the key that lets them claim their tax credit. Without it, they're stuck.
And really, if there's one thing to remember from all of this, it's this. Getting TDS filing right is a total win-win. It's not just about your own compliance, it keeps you safe, and it allows the people you work with to get the tax credit they've rightfully earned. It just makes the whole system work the way it's supposed to.
So, I'll leave you with this final thought. That tax calendar, it never stops. It's always moving forward, and the next deadline is probably closer than you think. So the real question is, are you ready for it?